So, hi TV35 land. I'm Dwayna Cooper, and you see me on here a lot. But many of you may not know that I am also a realtor with Caldwell Banker. And today I am in the Bank of Dudley with Sherry Adderhold, and we are going to talk to you guys about some of the things that it takes to purchase a home. Most people don't buy homes with cash, and so they have to go out and speak to a lender, and the lender helps them pay for the home. And a lot of times when people come and see me, Sherry, they have seen a home out on some street and they want to go and view the home. And one of the first things that as a realtor we've been trained to ask them is if they have pre-qualified. And a lot of times they don't even realize what that is and why we're asking them that. But for the main reason, I think, is that you need to know what you can spend or what you can afford and what you can pay for. So I want to talk to you about that process and how someone would even begin to get pre-qualified from a lender.
Well, I appreciate you having me. Thank you. Yes, I do recommend that every buyer, if they're serious and looking for a home to buy, that they do get pre-qualified. And like you said, it is to help you, as their realtor, find something that they can afford. So basically what we do is there's one form that we fill out or have them fill out. Takes about a minute or two to fill it out. Once they fill it out, we pull credit. It also goes off of stated income. So what we do is we go off of what they've stated to us as far as the income. That basically is the process to the pre-qualification. And once we do that, we do let them know, hey, you've been pre-qualified for a certain amount to purchase a home. At that point, normally what I do is I'll ask a few questions, and those questions are, do you have money down? Do you, are you wanting to put money down, or are you looking at 100% finance? And so that kind of leads me in a direction of, once I get them pre-qualified, what product best works for them.
So just pause for 1 second. When we say money down, a lot of times like you can get a conventional loan that might be an 80-20, and what that means is the loan amount is for 80%, but then you've got to have the 20% to put down. So if you were purchasing a $100,000 home and you had a conventional 80-20 loan, you would need $20,000 to clear that loan. But there are obviously other types of loans available. I just wanted to clarify that the money down is the percentage that is not covered by the lender.
That is correct. Conventional loans normally require money down. At that time, you can go as little as 5% down, 10% down, 20% down, even more than 20% down. So that's what I mean by money down, and that's a conventional loan. FHA loans do require 3.5% down. USDA is 100% financing as far as the purchase price.
Right. Wow.
But the USDA is household income driven. So just keep that in mind, that it is all of the household in the home, not just the borrower. So when qualifying you for a USDA loan, we have to use all the income to make sure that you qualify.
And could that be like a parent living with you, or I guess a spouse maybe who is not going to be on the contract? So anybody in the home that has earning potential.
Yes, absolutely. That's as well as students that are working.
Yeah.
It's all
interesting.
income. It's anyone that lives in the household.
And specific about USDA, the entire state of Georgia qualifies for USDA or something like that? Explain that to me.
Each county is really different. So it's really based off the demographics in the county. It's the population, what is rural, what is not considered rural. I do know that all of Lawrence County is rural, and so all of Lawrence County it will fit into the USDA as far as the location.
Right, which is excellent because, like you said, it is a 100% loan, meaning
Yes.
that it will cover 100% of the purchase price. That's amazing that,
It is.
and
It's a good product.
and wonderful for people to know that, those options are even available. I often encourage people, they'll say, well, how do I do that? And I say, well, where do you bank? I assume where you bank probably has a lending institution, and most of the banks here do. Otherwise, I have some great people that I could recommend you to if you need some assistance. So talk to me about, we pre-approve. We now know that we can spend X amount of money on a home. So they come to me, or they come back to me if I've referred them to you, and we begin to look for a home, and we find a home that we want to purchase for them. And we put in a contract. Sometimes, you have to dicker back and forth with the buyer and seller to come to a final sales number. And at that point, once we do have a binding contract in place, then you and I start to work together again, and we start to finalize that process with you being the lender. So can you talk to me a little bit more, like now that we've got the contract, how the process plays out?
Sure. Okay, so after we've got them pre-qualified and we kind of know what mortgage product works best for them, I normally go ahead and give them the loan application package to take with them. Basically what that is a checklist. It's the loan application package itself. They can take it with them, start working on it. Once they've got the sales contract and the offer's in and it's been accepted, then they will, Dwayna will submit the sales contract to me. They will bring in the loan application package. Once they bring it in, then that basically starts the process. So,
what are some of the things that are in that package? At that point, do you start becoming much more detailed about the individual? And what are some of the things you may ask them to bring in, or they may could prepare to bring in for you?
on my checklist, we've got 2 years of tax returns, 2 years of W-2s, most recent 30-day pay stub. We've got on that checklist 3 months bank statements. That's pretty much the most important piece of it. There's a few other pieces that might be needed, but as far as those pieces, everyone has to provide those.
And that's pretty standard, probably at any bank. These are the things that you would need to, to process the loan.
It is.
Great. And so we start working on all the paperwork. You get in all the final numbers so that the bank can make a really informed and educated decision about the loan. And then we move next into something that is very important to both you and I, and that is the appraisal.
Yes, it is. Once I've got the document signed and submitted to the underwriter to be underwritten, we go ahead and order the appraisal. The appraisal is kind of our sit still until we get it back, just to know where it comes in and if everything's good. So, once I get that back, I will send the borrower a copy of it, as well as the realtor copy of it. Once we get that and it looks okay, then we move forward. Then we order title work. Once we get that back, while we're in the process of ordering the title and the appraisal, I'm working conditions, what we call conditions, and that's where the file's been underwritten, and there's a few items that they need. So once we get all that back, then we're getting closer to close.
Awesome. Well, look, we're going to take a quick break. We're going to come back and we're going to finish up with all the information that people need to purchase a home.
Quality products and installations since 1985. That's 4 Seasons.
From humble beginnings with a desire to serve the Dudley community, Bank of Dudley has grown to 5 locations, serving Lawrence, Twiggs, and surrounding counties. Serving our community since 1905, the Bank of Dudley is looking forward to its 2nd century of community banking. Drop in today to any of our 5 locations. Jeffersonville, Dudley, East Dublin, Veterans Boulevard, and downtown Dublin. Bank of Dudley, member FDIC, and an equal housing lender.
Okay, we are back and we are going to talk some more about the process of purchasing a home. One of the last things we were talking about was appraisal, and I want to talk about how important that is in the whole process. So sometimes people come to me and they've got a pre-approval letter, and let's just randomly say they were pre-approved for a $200,000 home, and they go out and they find a home that is priced at, maybe they've come to a contract agreement of $176,000, let's just say. And they think, well, that's great because I pre-approved for 200 and this is only 176. And so they, as a buyer, sometimes have no idea, how the appraisal is going to affect that home. We work together. The appraiser goes out and he or she values the home at 165. And they have put a bid in and been accepted by the seller for 176. Well, as a bank, talk to me about what that means about the appraisal and how that's going to affect the loan.
Okay. Basically what that means is if we get appraisal back that's a lot less than what the purchase price was, we will go back to the borrower at that point because we can't make the loan unless there's some renegotiating or if there's more money brought to the table to make that work. So basically we go back to the borrower and we say, okay, here's a copy of your appraisal. It came in at 160 and your purchase price is 176. You really need to go back to your realtor and see what your options are.
Yeah, and I mean, some of the options at that point are just to go to the seller and, explain to them that this is what the home appraised for, because obviously a bank is not going to loan more money on a home, or at least not a ton more than what it's worth. And so we have kind of two options at that point, you and I. We can go back to the seller and ask them to reduce the price to the appraisal price, because the appraisal is done by fair market value of things that have currently sold that are similar to that home.
Correct.
Or the buyer would then have to take that difference, in cash, or have that money available if they decided that they wanted to go ahead and proceed with that closing.
Absolutely.
If they really, really wanted it bad enough, that would be up to them, but they would be responsible then for having the difference in the appraisal and the purchase price.
Absolutely.
So it's a really, really, really important step in the process. And really, the bank is looking out for the home buyer, because the purpose of the appraisal is to tell them what the true current value of the home is, and that you don't want them to pay too much over that.
Correct.
Yeah, so both of us were just looking out for, the people we're representing at that point. Next thing that you talked about was title work. We hear that a lot. Can you just explain to us a little bit about what that means?
Basically, the title work is where the attorney will go out there and research to make sure that the seller does own the property, that there's no liens or judgments on the property, that it's free and clear once it's sold, that
Which
it can
could
be transferred.
Past taxes, any other claims from another family member on a land. There can be a lot of things that can really cloud the title, as
Absolutely.
they say. So and you mentioned the attorney's office because he's our third partner. As you close a real estate loan, it takes the lender, the realtor, and the closing attorney all working together and communicating really well to finalize the process. There was just one other thing I wanted to talk to you about. There are some type of loans that require specific things of the home. You want to talk about that? I know VA is one that's very specific about what it requires the home to have at the home to be able to lend for that home.
On a VA loan, of course, that's for veterans. It is, 100% financing. As far as requirements of the home, you do need a termite inspection. You will need, if it's on well, you will need a well inspection or a water test, basically, for it. The home has to be in good living condition. It really cannot have a lot of, not cosmetics so much, but a lot of improvements that need to be done.
I was thinking specifically, one of the things that kind of pops to my mind with these VA loans is that really just some safety things that I recall them asking, like if there's a set of steps, they require a handrail at the steps. If the porch is a certain height off the ground, they require rails around the porch. Just some kind of, I would mainly say, safety features of the home that come with some of those required loans.
Well, basically what you're saying is required for all loans. Because if you've got a home that's, above, I don't know what, 3 feet, we're just using that as an example because I don't know what the codes are here. If it's over a certain foot, then you've got to have rails anyway, and that's on all loans.
Okay, good to know.
So the safety issues really pertain to all loans, not just VA.
Great. That's good information for people just to be aware of. In conclusion, let's talk about one other thing. I think a lot of people don't realize exactly how long it takes to close a loan. So just to give people a general idea about how long this process takes.
Okay, normally from start to finish, once we get the sales contract and we've started the process, it's normally a 30-day process. Now, some of the USDA or the FHA loans might go a little bit over 30 days, but for the most part, 30 days is about the length of time. And a lot of times what I do is I'll tell my borrower, the faster you get stuff to me, the faster I can move.
Sure. Well, thank you very much,
You're
Sherry.
welcome.
I think
Thank
this has
you.
been a really great and informative session for people out there. Obviously, they could come to you or I, and we'd be glad to give them more information about this. But I really appreciate it, and I hope that we've given people some valuable information today.